With retirement, you have to be smart about your exit strategy when it comes to the stock market. But what should you consider? Michael Canet with ProStatus Financial, a full-service financial and retirement firm in the Baltimore area, is also a popular radio show host and best-selling author, and he joins us now. Michael, welcome.
Good morning, Elsa.
Thank you so much for joining us. So tell me, when, markets right now are at an all-time high, when do you cash out and when do you just leave it put?
Shouldn't you always run up, just stay in as long as it's going up, because of course the stock market only goes up, right? It never drops, right?
I wish that were the case.
I think it's always a matter of personal choice of how much risk you're willing to absorb. But from our perspective, it always makes sense to take the winnings off the table, especially when you have enough. We had some clients come in the other day. It was an interesting conversation, and the perspective is always different for the husband and wife, typically. They came in, retired, getting ready to retire shortly. He was a federal employee. She worked for Grumman, so they both had really nice pensions, some Social Security, and they had a little over $1 million put aside. It was very interesting to hear their perspective on how much more risk they could take. And from what we were recommending is, what happens if this is 2008 and you retire? Or what happens if it's 2001, 2, and 3 when you retire and the markets are down 30, 40%? What are you going to do?
Right.
And his thought was, well, heck, we can write it out. We can afford to lose that 40%.
Right.
And so the
Let
wife...
me guess, the wife was saying
no.
no.
Yeah, the wife is absolutely beside herself with that.
Yeah.
So I did. I said, well, if you can afford to lose 40%, that's a little over $1 million. Why don't we take that $600,000 off the table and protect it, because that would make her happy. Put it someplace that generates the income that you're going to need. And the $600,000 was right about enough to give them the income they need. And then it leaves us the $400,000 left over that we can play with.
Got it. So that way was sort of a happy medium that everyone could buy into.
Yeah, perfect. And for her, it was more of a perspective of, I know the income's going to be there when we need it, so that monthly paycheck is going to come in no matter what. And for him, he still got the opportunity to play in the stock market with a good $400,000 or $500,000 chunk of change, right. and allowed him to swing for the fences. Now, of course, we still want to have an exit strategy for them.
Absolutely.
And we use some proprietary software. It's called WealthGuard. Mm-hmm. And the way this works is we determine with you, you figure out how much money you're willing to lose. And for her, their compromise was 15%.
That's what I was going to ask you. How do you determine how much you want? No one wants to lose anything.
Right.
Everyone would say like 0%. But how do you actually determine that?
Well, from our perspective, why lose anything if you don't need to, right?
Right.
I mean, as soon as you have enough money to accomplish your goals, whatever they happen to be, from our perspective, take that money off the table. And then anything else that's left over, right. It's not a matter of how much can you afford to lose, because quite frankly, you can lose it all and it doesn't change your lifestyle. Mm-hmm. And to me, that's what you want to do. You want to secure your lifestyle. But in this situation, and for most people, you want to pick a number that you can live with, a number that you're not going to not look at the statements. Remember 2008, the market's down 40%, nobody was looking at their statements?
Yes.
You want to pick a number less than that.
Yeah.
Because if you're going to ignore it because I can't even stand to look at it, that's too much loss.
Got it.
So we designed a program for them, and what happens now is when the stock market goes up, and of course, it's not really the stock market, it's when their portfolio. Because
right.
most people measure themselves against the stock market, but you're not in the S&P 500. You're in a broader range of
exactly.
investments.
Yes.
So we designed it in such a way that said, look, if the portfolio is going up, we'll let you know. But as the portfolio starts going down because the market's dropping, mm-hmm. let's notify you every so often, every 2 or 3%, that you're coming closer and closer to that 15% mark, so that you can decide, how do I want to change my portfolio to help hopefully avoid some of those big losses.
So you can take your eyes off it, but still get notified.
Absolutely, absolutely. You want to make sure that you're aware of what's going on, but you don't want to have to sit in front of a computer 24/7.
This is a lot of great information. I'm glad that you do the hard work for us, that we don't have to do that. And you also are helping Midday Maryland viewers. For the first 5 callers, that portfolio of $250,000 or $250,000 or greater is a full-blown retirement plan. You're going to analyze that, right?
Correct.
And generate the steps for a successful retirement. You can call now at 866-597-1040. All this great information, I'm sure they're going to call you with a lot more. Thank you so much for joining us, and we'll be right back with more Midday Maryland right after the break.